Hello everyone, I am glad to be filming this video from our head office in Hanoi, the capital of Vietnam. My name is Sarah from Phat Global company, a branch of Phat Group. Welcome to our real estate market summary report in 2020. This video aims to share some economic situations and property insights in Vietnam. But first, there are a few words about 2020. It was a year to forget, but with lessons to remember. From natural disaster, protests, riots, racial tension to the worst deadly COVID-19 pandemic, which has damaged the global economy with negative impacts like temporary and even permanent business closures. Public gatherings are banned, traffic restrictions, allied industry, export companies, tourism, retailers and restaurants have been hit dramatically, and so on. Worse than anything most of us have ever seen. Luckily, Vietnam has successfully controlled the spread of the novel coronavirus, and we have been able to make the country's growth rate to the highest group in the world. Even we are not quite out of the woods yet, but most of activities have been settled down to normal. As an investor, you should keep your focus on the move of the economy as you start to make your decision for the next year. And now, let's see how Vietnam economy performed in 2020.
In the last 5 years, Vietnam has generated more than 1.2 trillion US dollar in GDP. In 2020 alone, with the pandemic overrunning many countries, the Vietnamese economy still maintained positive growth at 2.91%. With this performance, Vietnam had delivered one of the highest growth rates in the year when the rest of the world in deep recession under the impact of the pandemic. Last year, Vietnam successfully contained the outbreak of COVID-19 and reported over 1.5 thousand infections and 35 deaths. Vietnam manufacturing sector was widely credited for the economy's outperformance last year, with production growing on the back of steady export demand. That is a trend that will persist in the coming years. Considering that Vietnam has been a major beneficiary of supply chain relocation trend out of China over the past several years, we see large scope for growth in Vietnamese export in the near future. According to many economists, the extent of the recovery depends on services, especially in domestic tourism, which will determine how quickly Vietnam's economy will return to its pre-pandemic path. It's been a rough year for the international tourism industry. General Statistics Office recorded the 3.83 million international arrivals in 2020. 14 million fewer than in record-breaking 2019. This represents a 78.8% drop in arrivals year-on-year. Overall, 96% of this year's foreign arrivals occurred in the first quarter, before inbound international flight was suspended on March 22nd. This month, just 16,300 foreigners entered Vietnam, a 99% plump compared to December 2019. Foreign direct investment (FDI) registered in Vietnam hit about 29 billion US dollar in 2020, a decline of 25% due to the significant impact of COVID-19 pandemic. FDI disbursement also experienced a slight decline of 2% to nearly 20 billion US dollar. Statistics from the MPI show that nearly 300 international companies were seeking investment opportunity in Vietnam or expanding their operations in the country. Over 60 firms had made some initial steps in investing or expanding present year. In 2020, there were a new apartment primary supply of nearly 17,200 units, down 34% year-on-year. This has been the lowest supply in the last 5 years. Remarkably, the new launch apartments saw in the fourth quarter 6,632 units more added in order to meet the customer demands to buy a house before Tet holiday. Following the guidance to expand urban planning to outside the city center, the new projects are developed in distant locations. Two noteworthy areas are Salam District and surrounding area of Ring Road 3. On the whole, the pandemic had not affected significantly on the housing market this period because of related investment are still considered as a safe channel. Moreover, Since this year's primary supply had been lower than years before, the absorption rate and price will remain positive. About 18,500 units were sold in 2020. Recently, the rate of price increase in suburban districts Nam Từ Liêm and Gia Lâm were higher than the central districts, which reduced the price gap. Essentially by improved recurrent traffic connection with the trend of developing new metropolitan in suburbs. As we enter 2021, there could be a positive presumption about the sales performance and supply, with around 25,000 units possibly launched. Talking about the office market, the supply of both grade A and B was more than 1.7 million square meters, affected by a years of hardship including travel restrictions. The occupancy rate of grade A was high at 21%, grade B at 13.5%. Regarding to the rent, there was an opposite trend, while grade B rent decreased 4.5% year-on-year to $13.5 per square meter per month. Grade A rent rose 3.2% year-on-year to $28 per square meter per month. The reason could be the relatively high rent of high-end new launch project of grade A. In 2021, we estimate more than 100,000 square meter office floor would join the market, which come from the project Oriental Sun Tower, HUD Tower, Techno Tower, Thai Building, and BRG Tower. The retail market in the following year would be also promising, with over 20 projects being enlisted in the market, like Lotte Sibucha Mall, Ion Mall Hoàng Mai. I just mentioned a few things about the market in 2020. For more detailed report, please visit our website. Thank you for watching. Happy New Year, stay safe, and see you on the next video.